Right. So we have 16 clauses in CARO 2016. Right. So as an auditor, these are the additional 16 points of reporting which have to be done by the auditor. Hai na? These are the additional matters of reporting for the statutory auditor. Right. Now, all these 16 clauses have been given in para 3 of CARO 2016. So whenever I have to write down a clause of CARO, I am going to write down clause 3, that is small Roman 3 of para 3 of CARO 2016. So just as we saw, okay, how do the references of that ethics ka clause comes, clause, part and schedule. So here likewise it is clause 3 of para 3 of CARO 2016. All the 16 clauses have been given in para 3 only. So para 3 of CARO 2016 shall continue to remain constant. Only what is variable over here is that clause what? I know clause 1 to 16 which you have over there. Right? So clause 1 of CARO 2016. Say example, clause 1 of CARO 2016 is in relation to fixed assets. Right, clause 1, yes, of CARO 2016 is in relation to fixed assets. And under fixed assets, there are 3 points. And under fixed assets, clause 1, which is fixed assets, under that there are 3 points. And now, continuously while studying CARO, what has to be your thinking direction? Okay, these are the points upon which I have to report in CARO. And to report on this point, what checking should I do as an auditor is what you need to think of. Okay, as an auditor, I have to give a report on this. Jaise company ke financial statements, you have to give a report on true and fair view. So to report on true and fair view, you know that you have to check for 6+1 point. You remember 6+1, SA 700, forming an opinion and reporting on financial statements. So similarly, in CARO also, now I have to do some reporting for fixed assets. These are the 3 points I have to do the reporting. To do the reporting, obviously first I will have to do the checking. So what checking should be done to report on this point is the main masala which you have to write down in your CARO ka answers. You understand? Just to make it further clear, if you look at your November 16 audit paper, you understand? Okay, what am I telling you? To understand that further, if you look at your November 16 audit paper, I think somewhere ahead there was a question on CARO. Yes, see. CARO 2016, yes, are you all there? Question number 3C. Hai na? CARO 2016 has made several significant changes and has introduced many new reporting requirements vis-a-vis CARO 2015. In view of the above, describe the relevant clause relating to Nidhi company. So I told you it's clause 12. Compliance with net owned funds to deposit requirement and the relevant provision. So give us the reporting requirement under that clause. And what are the audit procedures to be adopted for verification and reporting on the same? So you have to report on what clause? First tell us that. And to report on that, what checking are you going to do? Tell us that. Do you understand that? So what you have to know, one, okay, what is the reporting? And second, to do this reporting, what checking is to be done? For one, what reporting is to be done, you have to apply the legal chashma. You have to look it from the legal requirement. Okay, what is the legal requirement of reporting? And once you've understood the legal requirement, then you should remove those glasses and keep them aside. And then wear the auditor glasses. And you have to look at the world from the viewpoint of the auditor. As an auditor, how would you do the checking for the same? Right, so clause 1, which is fixed assets, under which there are 3 points, under which point number 1 is whether the company is maintaining proper records showing full particulars, including quantitative details, and situation of fixed assets. That is point 1 under clause 1. whether the company is maintaining proper records. Now, the term proper records has not been defined in CARO 2016, showing full particulars. यानी कि रामायण महाभारत full details of the fixed assets, serial number, asset ID, asset description. Have you seen an FAR, fixed assets register? You understand? Serial number, asset ID, asset description, date of purchase, date put to use, cost of asset, incidental expenses, total cost of asset, rate of depreciation, depreciation till date, depreciation for the year, net value of the asset. Assets added during the year, assets sold during the year, assets impaired during the year, assets revalued during the year, assets disposed of, assets held for disposal during the year, foreign exchange fluctuation in the assets, full particulars. What does it say? Full particulars, including quantitative details. Now say an example in Infosys, say there are some 1,70,000 employees plus working over there. So now 1,70,000 employees, they will at least be having 1 lakh, so say 2 lakh chairs in their office. So in their fixed assets register, F&F, furniture and fixture, you can see 2 lakh chairs over there. So it says you cannot create just one line item, na? Okay, chair, 10,000 rupees each into 2 lakh chairs, and that's it. What does it say? Quantitative detail. In the fixed assets register, you will have to create one fixed asset line item. Like say, you know, AS Foundation example has 30 ACs. So we can't show in our fixed assets register ACs, and 30 in quantity, each AC 20, 80,000, 90,000 in total. What does it say? Quantitative detail. Each and individual single line item you have to create for each fixed asset. And against that quantitative detail, you also have to give the situation. Situation matlab you have to give the location of the fixed asset. And why location should be given? So as to make the physical verification possible. So tomorrow if you want to do the physical verification of the 30 ACs at AS Foundation, where are you going to find them? Are they all kept in one place in the godown or in some locker somewhere? No, so it has to be specified, na? Okay, say AC number E2 and E1 are there in classroom number 5 on floor number 3. You understand? Okay, 2 ACs are there in the office, say 16 ACs are in classroom number 3, 4 ACs are in classroom number 4. You'll have to give the situation, no? Why? So as to make the physical verification possible. Tomorrow वो Infosys का 2 lakh chairs का physical verification करना है, तो where should we go for the physical verification? Where will we find those 2 lakh chairs? So that is why the location of the fixed asset should be given. So now if it's a chair, if it's an AC, I can write down, okay, it is in classroom number 3, it is in the office, it is in Chennai office, Mumbai office, Hyderabad office, I can write down. But what if it is a laptop or a car which has been given to the employee of the company? Then where you will write down where it is? Can you write down the location? Say it's a car or a laptop given to an employee, then can you write down the location, okay, it is in classroom number 4 or classroom number 3? No, then you will have to give the name and designation of the employee. You know, laptop ke piche ek serial number hota hai. You know, when they do the physical verification, they track it through that serial number, no? So the name of the employee is given against that particular laptop. So if you want to do the physical verification of this laptop, you know, you have to go to this employee. Right, so that is why situation of fixed assets. So what is point 1? Whether the company is maintaining proper records, showing full particulars, including quantitative details and situation of fixed assets. Point number 2, whether these fixed assets have been physically verified by the management. Whose responsibility? Physical verification of fixed assets, management's responsibility. So whether these fixed assets have been physically verified by the management at reasonable intervals. Whether these fixed assets have been physically verified by the management at reasonable intervals, and material discrepancies noticed on physical verification, have they been properly dealt with in the books of account? Books of account. is physically verified by the management at reasonable intervals. So whatever are the fixed assets of the company, they should be physically verified by the management at reasonable intervals. So now, yes, whose responsibility? Physical verification of fixed assets, management's responsibility. So these AS Foundation ka AC should be physically verified by the management at reasonable intervals. So in order to check whether these fixed assets are being physically verified at reasonable intervals, first I am going to ask the management for their physical verification ka policy. Okay, what is your frequency of physical verification of fixed assets? So now if the management tells me that CCA, land and building, once in 3 years we do physical verification. Say plant and machinery, furniture and fixture, we do physical verification alternate year, yani ke once in 2 years. 1 year plant and machinery, 1 year furniture fixture. And they say computer equipments and electrical and all those, that we do physical verification every year, once in a year. So this is their interval of physical verification. What I have to comment ke whether this interval is a reasonable interval. And the statement on Caro has clarified that reasonable interval means ke when the time gap between two physical verification is not more than 3 years. When the time gap between two physical verification is not more than 3 years. So right now, does this physical verification policy seem good to the auditor? Is it? The time gap is not more than 3 years. At least once in 3 years, all the fixed assets are being physically verified. So can I say, yes, fixed assets have been verified by the management at reasonable intervals as per the physical verification policy laid down by the management. On the other hand, if they would have said, see where land and building is going to go, once in 10 years we go and do the physical verification. Plant and machinery, furniture, fixture, once in 5 years we see. And computer, after 4 years you have to scrap, no? So that time we go and check how it is, and then we scrap it. Then as an auditor you would have comment, okay, no, physical verification of fixed assets is not being conducted by the management at reasonable intervals. Right, and then what is the physical verification policy? And then whether they are doing the verification as per the policy, because design should also be there and implementation should also be there. And now material discrepancies noticed. So in the fixed assets register, how many chairs were seen in the in the Infosys ka FAR? 2 lakh chairs. On physical verification, how many were found in working condition or usable condition? Say 1,80,000. So now 20,000 is a material discrepancy noticed on physical verification, whether it has been properly dealt with in the books of account. What is going to be the books of account over here? The fixed assets register. And from where will you come to know the material discrepancies? The physical verification ka report. And if there are no material discrepancies noticed, then we again want a written representation from the management. And if there were discrepancies, whether they have been properly dealt with, again for that we want a written representation. So if they are saying no discrepancies, give us a representation. They are saying there were discrepancies but we properly adjusted them, then also give us a representation. That is point 2. Whether fixed assets have been physically verified by the management at reasonable intervals, and whether material discrepancies noticed on physical verification, have they been properly dealt with in the books of account. Right, I am discussing which clause with you? Clause 1, which is fixed assets, under which there are 3 points. Yes, point 1, proper records. Point 2, physical verification. And point 3, which is a new entry, so R raised to 10. Yes, this one is awaited for a case study in the exam. Whether title deeds of immovable properties, new ideas come into their brain. Whether title deeds of immovable properties are held in the company's name, and if not, please provide the details thereof. Title deeds of immovable properties, are they held in the name of the company? Yes, this came mainly because of that Sahara and Satyam. You understand that the purpose behind introduction of this clause was mainly Sahara and the Satyam group. You understand now, because immovable properties, all Benamidar properties, all in the personal names and of the directors and the managers, the managing directors of the company. So that is why, what does it say? Title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof. Now, immovable property, yani ke they are mainly talking about the land and building. And a title deeds of immovable property. So what document should I check for checking the title deeds of immovable property? And the transfer deed, and the sale deed, the conveyance deed, and the sales deed, the lease deed, and the conveyance deed. These are the documents from where I will come to know whether the title deeds of immovable properties, whether they are held in the name of the company. Right. Now, sometimes what may happen, a property might be under transfer. You understand, no? Say company A got amalgamated or merged with company B. That is why all properties of company A are yet to be transferred in the name of company B. So till that time, they will continue to remain in the name of company A. So those are the situations which you need to consider. Then there might be cases where the property is under litigation. You understand, there is a dispute which is going on against the property. So again, you need to have a communication with the lawyers and regarding what is the dispute going on. Sometimes the property could also have been mortgaged with the bankers. All probabilities they've covered. These all points you have to write in your auditor chashma pen ke. I told you, you have to wear auditor ka chashma and then start writing the audit procedures. So you have to write down if they have been mortgaged, then again you have to call for the copies which are submitted to the bank. Right. And sometimes what may happen, the property title deeds are lost. The property title, it's lost. So again, in that case, you will have to check whether an FIR has been filed. वो बोलते मालूम नहीं, title deed गुम गया company का, transfer deed गुम गया, deed we are not able to find. So again, in that case, you will have to check whether an FIR has been filed. So these are the 4 points which they are talking of over there. पहले तो क्या बोलते हैं, which document should you check for title deeds? Transfer deed, sales deed, conveyance deed, and so. Right? That yes, lease deed, if it's a leasehold property. Then after that, what does it say? If the property is under transfer because of some amalgamation or so, then you need to check those documents. Then sometimes it may so happen that the property has been mortgaged. So again, you need to check the documents which have been submitted to the bank. Then sometimes the property might be under dispute. So again, you need to refer the matter to the lawyer. And sometimes the property documents might have been lost. So in that case, you need to check the copy of the FIR which has been filed. Yes, are you getting that? Title deeds of immovable properties. I'm telling you, opening ceremony awaited. And title deeds of immovable properties, are they held in the company's name? If not, provide the details thereof. Yes, title deeds of immovable properties. Now, this is Annexure A to the audit report of Infosys. Right, so this is the main report, true and fair view, and then after that, this is Annexure A. So what is the first point in Annexure A? One is over there for fixed assets. And look at the 3 points of reporting over there. Are you able to see? Right. The company has maintained proper records showing full particulars, including quantitative details and situation of fixed assets. Then the company has a regular program of physical verification of its fixed asset, by which fixed assets are verified in a phased manner over a period of 3 years. In accordance with this program, certain fixed assets were verified during the year and no material discrepancies were noticed on such verification. In our opinion, the periodicity of physical verification is reasonable. I told you, whether fixed assets have been physically verified by the management at reasonable intervals and material discrepancies noticed, have they been properly dealt with. And according to the information and explanation given to us, and on the basis of the examination of records of the company, the title deeds of immovable properties are held in the name of the company. And title deeds of immovable property are held in the name of the company. So the 3 points which we just saw in Caro, we also practically saw the reporting of that in case of Infosys. And a title deeds of immovable properties, are they held in the name of the company? Right. And then after that, mainly I want to discuss with you the third heading. Title deeds of immovable property, are they held in the name of the company? If not, provide the details thereof. Everybody, are you on page number 3.4? Right. Auditor should examine. So this is the third column is for auditor chashma, no? Looking at the audit procedures which are required to be performed. So what does it say? Auditor should examine the sale deed, the transfer deed, the conveyance deed, the lease deed, or any other relevant documents which evidence title for reporting under this clause. The auditor should carry out detailed examination where immovable properties have been transferred as a result of conversion of a partnership firm or LLP into a company or amalgamation of companies. Then where title deeds of immovable property have been mortgaged with the bank's financial institutions for securing the borrowings and loans, the confirmation about the same should be sought from the respective institution to this effect. Then there might be instances where title deeds were lost or accidentally or otherwise. Then the certified copies of the documents as available. Yes, then also the details about the FIR filed about loss of such documents needs to be obtained and documented. Right. And further, any discrepancy, including any pending disputed court cases relating to the ownership, needs detailed discussion with the management and should also be properly documented. Yes, I told you can also have a communication with the lawyers who are handling it on behalf of the company. And the auditor should verify the title deeds available and reconcile the same with the fixed assets register. Obviously, a starting point is going to be the fixed assets register, and for all the immovable properties over there, you're going to ask for the title deeds. And so title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof. Right? So that is clause 1, which is relating to fixed assets. Yes, is this clause 1? And a title deeds of immovable properties, that is clause 1C. Title deeds of immovable property, are they held in the name of the company? Right. So tell me once again, what are the three clauses, three parts in clause 1 for fixed assets? Yes, whether the company is maintaining proper records showing full particulars, including the quantitative details and the situation of fixed assets. Then whether these fixed assets have been physically verified by the management at reasonable intervals and material discrepancies noticed on physical verification, have they been properly dealt with in the books of account. And the last one, whether title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof. Title deeds of immovable properties, are they held in the name of the company, yani ke company's name. Okay, now we have clause 2, which is regarding the inventories. And for inventories, now we have only one clause, one part. For the audit file? No, only that you verified. So you'll have a checklist of CARO. So in that you need to just keep on documenting okay, what evidences have you checked. And you have to put your initial against the documents which you have checked. Stamp them. Right, so no need to put it in your audit file. Okay, right, clause 2, which is inventories. And now under inventories, we have only one part. Like in the clause 1, fixed assets, we have 3 points over there. No, for inventories, we have only 1 point. Whether inventories have been physically verified by the management at reasonable intervals and any material discrepancies noticed on physical verification, have they been properly dealt with in the books of accounts. So what was clause 1, fixed assets ka second point? That is also the inventory ka point. So again, for physical verification, we will look into the physical verification ka policy. For fixed assets, physical verification for reasonable interval was once in 3 years. For inventory, it is going to be at least once in a year. And obviously, all inventory of the company should be physically verified at least once in a year. So their reasonable interval was once in 3 years. Your reasonable interval is going to be once in a year. So say, A category inventory once in a week, that is 52 times in a year. B category inventory, say once a month, so that's going to be 12 times in a year. And C category inventory once in a year, so that's going to be 1 time in a year. So what you need to inquire, whether physical verification of inventories is being conducted by the management at reasonable intervals. And material discrepancies. So again, from where will I come to know the discrepancies? Physical verification report. Have they been properly dealt with in the books of accounts? So again, for that I will have to check the inventory register. Okay, say, in the inventory register you saw that the cement dealer, they are showing 80,000 kg of cement in stock. But on physical verification, say only 58,000 kg of cement was found in stock. So 60,000 shown in the register, and on physical verification only 58,000. So 2,000 kg where the material discrepancy has been properly dealt with in the books of account. And obviously over here also you have to take the written representation from the management. So old Caro also had a point for inventory where the procedures followed for physical verification, are they adequate in relation to the size of the company and the nature of its business? Out. And that point has been deleted now from the Caro 2016. Now it talks only about physical verification at reasonable interval, discrepancy properly dealt with. That's it. Right, so that is clause 1, which is fixed assets, and clause 2, which is inventories. With that, I come to clause 3, which is loans to section 189 parties. And loans to section 189 parties. Who are these 189? Related parties to whom 185, 186 of the Companies Act is attracted. And directors and interested parties. What does it say? Loans to. Yani ke it's only talking about the loans granted. It is not talking about the loans taken. Loans given. Yani ke loans granted to section 189 parties. It is not talking about loans taken from them. Only loans given to them. Old Caro, it was loans to or from directors and interested parties. Now it is only loans to, not from. It's only talking about loans to. So what does it say? Whether the company has granted any loan, whether the company has granted any loan, secured or unsecured, to company, firms, LLPs or other persons covered in the register maintained under section 189. What is the common point it says before the 3 points of reporting over there? Whether the company has granted, given any loan, secured or unsecured, to company, firms, LLPs or other persons covered in the register maintained under section 189. Simple language. Just as an example, if I want to take, say company has given a loan to a firm where the director is a partner. Company, Geo Limited, has given a loan to a firm, and that firm, this partner, director of Geo Limited, he is a partner over there. So that will be a case which will be properly, clearly covered by clause 3. So point number 1 over there, whether the terms and conditions of the loan given, whether they are prejudicial to the interest of the company. Prejudicial, not prejudicial, whether they are prejudicial. So prejudicial means what? Not in the best interest of the company. So whether the loans and loans given to section 189 parties, whether they are prejudicial to the interest of the company, okay, whether they are not prejudicial to the company's interest. Now, when would you say that it is prejudicial to the company's interest? Okay, what is the amount of loan given? 50 lakh. What is the security which has been taken against the loan? 10,000 rupees. 50 lakh rupees ka loan given and 10,000 ka security taken. What is the rate of interest at which the loan has been given? 0.02%. What is the period of repayment of loan? 100 years. You understand now? This prejudicial, it's not in the best interest of the company. So by default, is the statutory auditor required to look into the propriety of business conduct by default? By default, a statutory auditor is not required to look into the propriety of business conduct. You may remember the sentence from IPCC. As an auditor, he has nothing to do with the prudence or imprudence, the giving of loans with security or without security of the decisions taken by the management. Auditor expressing an opinion is no assurance as to the future viability of the entity, nor the efficiency or effectiveness with which the management has conducted the affairs of the enterprise. So as an auditor, as a general rule, are you concerned with the propriety of business conduct? No. Are you concerned with the decision making of the management? No. Because we are doing the audit of the financial statements. We are not doing the audit of the decision making of the management. So by default, does the statutory auditor look into propriety? No. But wherever company law specifically tells the auditor to look into propriety, in those matters we look into propriety. This is one example of that. So what you want to do? At what rate of interest loan has been given, what security has been offered, what is the schedule of repayment? You have nothing to do by default. But now, because company law has specifically told you, or central government has specifically told in the Caro reporting, that is why you're looking into the propriety. Right. So whether the terms and conditions thereof are not prejudicial to the company's interest. Then second over there, whether the schedule of repayment, of principal and interest, they are so specific, principal and interest has been stipulated. Otherwise what? They are telling firm ko hi loan diya hai na, director is only a partner na. However it is possible for you, you repay. There is no such repayment ka schedule. No, should not happen. Whether the schedule of repayment of principal and interest has been stipulated. You understand? Whether they have given them a repayment schedule. And whether the receipt of principal and interest, whether it is regular. When will you say that it is regular? If it is received on or before the due date, then you will consider it to be regular. So whether receipt of principal and interest, is it on a regular basis? So one, whether the terms and conditions are not prejudicial. Then second one, whether the schedule of repayment of principal interest has been stipulated and whether the receipt of principal and interest is regular. And if the amount is overdue, and say if the amount is overdue, yani it has not been paid on the due date, then you have to state the amount which is overdue for more than 90 days. Old Caro, you know, they used to say overdue for more than 1 lakh. Now they say 1 lakh amount is not specified. It says all amount which is overdue for more than 90 days. And also whether reasonable steps have been taken for recovery of principal as well as interest. Reasonable steps taken for the recovery of the principal and interest. Reasonable steps taken. Now, reasonable step taken need not necessarily be a legal step. Even a gentle reminder sent could be considered as a step taken for recovery. It's not that you have to take them in the courts of law, that see due date is over and they've not paid us the money. What does it say? Reasonable step to be taken for recovery, which need not necessarily mean a legal step. Right, so in the exam now there could be a question framed. Okay, A Limited has given a loan to its sister concern. So as an auditor, what are the reporting requirements or what are the considerations while doing the reporting? So one, you need to check whether the terms and conditions are not prejudicial. Second, whether the repayment schedule has been stipulated. The stipulated is a new word in Caro 2016, was never there before. Pehle they said only whether receipt is regular. Now they say check whether schedule is stipulated and then whether receipt is regular. Are you getting what I'm telling you? And then after that it says if the amount is overdue, then state the amount which is overdue for more than 90 days from the due date obviously. And also whether reasonable steps have been taken for the recovery of the principal and interest. Right? So loans to 189 parties. Yani ki loans given to section 189 parties. What does it say? Whether the company has granted any loans, secured or unsecured, to company, firms, LLPs or other persons covered in the register maintained under section 189, then these are the 3 points of reporting. Yes, terms and conditions, stipulated the schedule and receipts are regular, overdue, then amount which is overdue for more than 90 days. So ये बैंक के जैसे हो गया ना, NPA type. For NPA everywhere we have 90 days as the key word, na? Key term over there. Okay, so overdue for more than 90 days and whether reasonable steps have been taken for the recovery. So obviously for this I will have to check the copy of the loan agreement. Because from there I'll come to know the security offer, the rate of interest, the repayment schedule. Then I'll have to check the bank statement, whether the recovery has been done on or before the due date. And if not, then all which are overdue for more than 90 days. So again, I'll have to ask the client to prepare a statement for all loans which are overdue for more than 90 days, what is the amount. And then I need to check the reminder sent or the legal step taken for the recovery of the same. You understand? So that is clause 3, which is regarding loans to section 189 parties. So clause 2, inventories, where point is similar to that of what we studied in clause 1 for fixed assets. And then what does it say? Loans to 189 parties, whether the company has granted any loan, secured or unsecured, to companies, firms, LLPs or other parties covered in the register under section 189. If so, whether the terms and conditions of the grant of such loans are not prejudicial to the company's interest. Then schedule of repayment of principal and interest and payment of interest has been stipulated and whether the repayments or receipts are regular. If the amount is overdue, state the total overdue for more than 90 days and reasonable steps have been taken by the company for the recovery of the principal and interest. Yes, are you getting that? Okay. What are the points it says you need to check? Yes, the auditor is required to disclose the information for all kinds of loans, whether long-term or short-term, whether given in cash or in kind, to the parties covered in the register. The auditor should also take into consideration the loan transactions that have been squared up during the year. So during the year you gave the firm a loan of 1 crore, it repaid also 1 crore, but still you have to do the reporting under clause 3. Right. Terms and conditions would include rate of interest, security, terms and period of repayment, any restrictive covenants. Covenants matlab any conditions. Then the auditor has to examine the loan agreement, whether the schedule of repayment has been stipulated, and regular if they are paid on or before the due date. As and when they fall due, if they are paid, then it will be considered as regular. Then disclose the aggregate of the total which is overdue for more than 90 days. Right, and reasonable steps taken, issues of reminder, advocates or solicitors notice may amount to reasonable steps even though no legal action is taken. And how will you do the reporting if you find such overdue cases? Number of cases, principal amount, interest amount overdue, total overdue, reasonable steps taken for recovery in the remarks. Right, so that is clause 3, which is regarding loans to section 189 parties. So these are similar to the points which we had in old Karu also, 1, 2, 3, fixed assets, inventories and loans to section 189 parties. Yes. Yes, those which were given in the previous year but they are still outstanding in the current year, those also have to be disclosed. And any loans which are outstanding, which are carried over from previous year, those also have to be disclosed. Yes, yes. Even Companies Act 2013, even before that, any loan, even those are to be reported. Because this requirement was there in Caro 2003 also, Caro 2015 also, and it continues. Rather, Caro 2003, it was loans to or from. And now it has only become loans to. And in old Caro, it was section 301 party. Now we call it as a section 189 party. Right, so first clause 1, fixed assets. 2, inventories. 3, loans to section 189 parties. Then clause 4 is now a new entry. What does it say? LIGS, loans, investments, guarantees, securities. Yes, whether they are in compliance with section 185 and 186 of the Companies Act 2013. So do you know a little bit about 185 and 186 of the Companies Act? Investments, intercorporate investments type of, right? So we will cover that tomorrow and we will complete with the 16 clauses of Caro tomorrow. Okay.